Dirty dealings, corporate battles, consumer woes. This is Evening 5. National oil firm Petronas said it is withdrawing its operations from South Sudan. In a statement, Petronas explained that the decision was made following a 2-year period of divestment initiatives in alignment with its long-term investment strategy amid the changing industry environment and accelerated energy transition. A planned sale of its entire oil and gas business in South Sudan to Savannah Energy, a British energy company, for up to $1.25 billion was scrapped as both parties could not come to terms. The exit formally marks the end of Petronas' more than 2-decade venture in the East African country that leapt from one crisis to another that resulted in frequent shutdowns and disruptions to its operations there. The company also grappled with South Sudan's secession from the Republic of Sudan in 2011 after decades of armed conflicts that killed more than 2 million people. Petronas has shed some local and foreign assets. Most recently, Petronas completed the divestment of a 74% stake in Engen in South Africa in May and sold 25% equity in fertilizer unit Petronas Chemicals Fertilizer Sabah through Petronas Chemicals for 1.25 billion ringgit in 2023. German semiconductor giant Infineon Technologies will invest an additional 5 billion euros in constructing the world's largest 200mm silicon carbide power fabrication plant in Kedah. The investment is for the second phase on top of the original 2 billion euros for the first phase, according to a statement from the Malaysian Investment Development Authority. The two phases will expand its Kulim 3 fab building, will together generate 1,500 jobs in Malaysia, says MIDA. The plant located in Kulim High-Tech Park is slated to be the largest 200mm front-end manufacturing site for Infineon, focusing on automotive, green industrial power and sensor systems. Investment, Trade and Industry Minister Tengku Datuk Sri Zafrul Abdul Aziz said this investment highlights the nation's growing credibility as a regional hub for cutting-edge technology and innovation in the semiconductor space. MIDA CEO Sheikh Samsul Ibrahim Sheikh Abdul Majid said the expansion significantly strengthens Malaysia's position in the global semiconductor supply chain. Enterprise software firm Vetece Holdings launched its initial public offering on the ACE Market, which would raise 34.3 million ringgit. The IPO, priced at 25 cents per share, involves a public issue of 98 million new shares and an offer for sale of 39.2 million existing shares. Applications for the IPO will close on August 14th, and the listing has been scheduled for August 28th. Vetece mainly provides software for businesses, including implementation, maintenance, support, and professional services, as well as resale of hardware and software. The company's clients are mostly in the telecommunications and financial services industries. Telekom Malaysia is Vetece's single largest client, accounting for more than half of its revenue so far this year. The company also counts Telstra Corp in Australia and banks in Malaysia as its clients. The sale of new shares would raise 24.5 million, and about 27% of the proceeds has been set aside to pay hardware and software licensing fees. The company is also planning to spend the proceeds on the rollout of new core products and services, strengthen its Singapore operations, and also around 15% of the proceeds for the establishment of a Centre of Excellence for Software, among others. MK Land Holdings said it has reached a settlement with the tax authority that would cut the additional bills and penalty imposed on its unit by nearly 85%. Under the settlement agreement with the Inland Revenue Board, the taxes payable by Saujana Triangle will be reduced to 12.16 million from 80.77 million ringgit. The amount will be settled progressively by December 15th this year, MK Land said, adding that the agreement will not materially impact the company's finances. In 2017, Saujana Triangle received notices of assessment for additional income taxes of 55.7 million for the years 2009 to 2011 and a 45% penalty of 25.07 million for the year 2013. MK Land contended that the IRB had treated gains from land sales in 2009 as revenue rather than capital. Further, the IRB had also ignored the 5-year limitation for raising the assessments while disallowing certain development costs as only permitted provisions. The company also believed that the land sales of the investment properties are capital transactions which are liable to real property gain tax in assessment year 2009. RPGT was suspended during the global financial crisis between 2007 and December 2009 and was subsequently reinstated in 2010, but at much lower rates. ATA IMS has teamed up with Shanghai-listed Jinhua Chungguang Technology Co. to venture into the household and electrical appliances sector. The electronics manufacturing service provider said its wholly owned subsidiary, Integrated Manufacturing Solutions, and Chungguang have agreed to form a JV company known as Suntone Malaysia Technology. IMS will hold a 49% stake in the JV company via an investment of 4.9 million, while Chungguang, which specializes in cleaning electrical hoses and accessories, will hold the remaining 51% stake worth 5.1 million ringgit. Noting that many customers are shifting their manufacturing bases to Southeast Asia due to geopolitical factors, the group said the JV will enable the ATA Group and Chungguang to capitalize on these trade diversion opportunities. For FY 2024, the group reported a net loss of 104.9 million, down from 254.54 million previously due to lower impairment of goodwill, plant and equipment and reduced provision for slow-moving stock. Revenue fell 56.3% to 399.8 million from 915.8 million ringgit.